As far as the financing is concerned, there are presently NBFCs, there are banks, there are other financing solutions available, both for the vendor as well as for the client. There could be eventually blockchain-based lending solutions also, which could handle this. Between the installer and the client, there are installation services as a business, asset ownership is a business, asset maintenance is a business, asset optimization is a business. So all of these are business models which are available. Between the client and the utility, of course, there is various intermediaries as well, franchisees, discoms itself. There is scope for a lot of AI and things like that. So there is so this is the ecosystem, and these are the different business models which are possible in distributed generation.
It's such a big privilege and pleasure to connect with everyone and our distinguished keynote speaker, who is handpicked because of the think input and the rich experience he brings in. And thank you also to our distinguished audience for joining us, most of whom are CEOs and CXOs and our senior leaders. Many of them are our members and are repeat visitors to our webinars. This is very encouraging and motivates us to provide even higher levels of dialogue through the online mode as well. For those of you who are new with us today, BlueCircle is the world's first sector-specific networking app for business leaders that's built in India. We currently focus on 20 sector communities, such as healthcare, e-mobility, renewable energy, real estate, logistics, and many more. We also present socioeconomic insights, which ultimately determine the evolving complexion of the market. Along with our weekly webinar series and our digital publication, you will be happy to know that we have recently launched the first version of the BlueCircle app for leaders, somewhat like the sector-specific LinkedIn for senior leaders, a space to have meaningful conversations, connect with over 10,000 plus like-minded leaders from India and across the globe, house high quality curated content, and access business opportunities across these sectors. Those leaders among you who are interested, please do join us. I will share the link to the app in the chat section, and will soon be sending invitations to our new guests post today's discussion. Now, without further ado, I'm pleased to introduce today's keynote speaker, Mr. Shravan Sampath, founder and CEO, Oakridge Energy. He is a leading industry professional in renewable energy, worked in leading organizations like Reliance, L&T, Equus Funds, and Ampere Group. He has contributed to development of 2,000 megawatts of energy capacity and catalyzed about $2 billion of capital in Indian renewables. At Oakridge Energy, Shravan has conceptualized urban solar rooftop projects in Delhi and other Indian cities as a solution to the climate crisis. Oakridge was the first Indian company to raise an international line of credit for residential solar from Oiko Credit, which is an $8 billion Dutch social impact fund, and was awarded with the United States India Clean Energy Finance Grant for this unique business model. Thank you. And for today's topic, Mr. Sampath will be discussing financing distributed renewables in India. Now I request Mr. Sampath to please begin the session, sir. Thank you.
Thank you so much, Gautam. Thanks for the very kind introduction. And thanks everyone for joining this brief session where I'll be talking a little bit about distributed renewables and the financing models available, and possibly what is the future of distributed renewables and the financing available for this. So, this is the presentation is intended for a very generic audience. So I mean, I'm trying to explain this from the very basics of what the business is, what the financing options are, what are the challenges, and possibly what is the future of distributed renewables. So I will start my presentation right now. Okay. Right, so this is us, and these photos on top are some of our urban solar projects. So the flow of this presentation is a bit as follows. First, we'll talk a little bit about what distributed renewables are. Then we'll talk about the business value chain and the financing value chain. What kind of financing options are available? in the market today to develop a distributed renewables business, and the possibility for new business models. What are the challenges with the existing financing models, and what is the potential for new business models? So that's the way I'd like to structure this presentation, and hopefully it will be useful to not only industry professionals on this group. I see a lot of my good friends on the audience panel, so hi. But also it should hopefully serve as a precursor to thinking about how we should really catalyze financing in the distributed renewable space. So just to give you an overview, what is distributed generation? Right? The historical model of power generation is that a power plant is set up in a centralized manner, typically in the middle of nowhere. Either in a hydro location, large hydro plant or a thermal plant somewhere. Large transmission lines send this power from there to load centers, consumption points, cities, homes, your home, my home, and that's how power gets consumed. So there are three legs to this. There's generation, transmission, and there's distribution. And then there's consumption, right? So this was the conventional model. In the early 1900s, the first power plant was actually incidentally set up in Manhattan, of all the places. But eventually it became, a model for us to develop projects outside cities and wheel the power in. So this was the original centralized generation model. The distributed generation model is slightly different in the sense that the renewable projects can be set up at the consumption point directly. You don't need to go through the network. You're managing your own power consumption, generation and consumption right there. There are no transmission losses because the power that you generate is getting consumed exactly at the same point. So there are no losses. There is a need to match the generation profile and the consumption profile. So there's a bit of optimization and analytics involved there. But importantly, the mathematics of this is that power generation and the cost of distribution is exactly the same because there is no loss anywhere in the middle. And that's why this is such an interesting, exciting, and explosive space for the future of power distribution. Importantly, the system does not like distributed power. And as the professor would say, we are the resistance, aren't we? Because what we are looking at, in effect, is that we are cutting out the large generation plants, the transmission systems, and most importantly, the distributed utilities, the distribution utilities. So these are the entities which are wielding maximum power in the system today. All of them are, each distribution utility employs lakhs of people, are typically highly inefficient, except for certain efficient discoms, which are usually in the private sector. And all the losses get masqueraded and come to you in the form of increased power tariffs. So to give you an example, some of the power that's actually procured today is in the region of around 2 rupees and 3 rupees. But when that power reaches your plug point, you're effectively paying somewhere between 8 rupees to 10 rupees for it. So where that loss happens is because we have to feed all these people on the way. We have to feed people in the transmission network, distribution network. We have to manage losses and all of that. And that's why the system does not like it if you move back, because all these people lose their leverage in the system. There is more accountability because there cannot be any losses. And most importantly, there is no margin available for intermediaries. And that's why as the world moves towards distributed generation, there is a lot of resistance, a lot of reticence from incumbent market participants to support this transition. And it's very important for entrepreneurs and sector participants to take an active interest in pushing distributed generation as an alternative model of power distribution and generation. Distributed generation is in fact a global shift as everything else is moving towards disaggregation. So previously you had large shops like the Walmarts and the Targets and Macy's who were selling stuff to people. Now you have Amazon, which is a marketplace. So anybody can sell and anybody can buy. So there is a disaggregation. There is a disaggregation where hotel chains like Hilton used to dominate the marketplace. And now you have Airbnb, which is valued more than any of these large hotel chains. And they just aggregate demand, and they provide places to stay for you and me. Uber, blockchain as a technology, All these entities are the technology world today, and the entire future of, I would say, mankind is shifting towards this kind of disaggregated models, and power is no exception to that. In power also, there is a shift, and there is a requirement for us to move from an existing centralized model to a distributed model, and that's what distributed generation and distributed renewables is all about. Just to sort of reiterate, as I mentioned, a centralized generation model is where the power plant is located somewhere else and it supplies to various locations. While a distributed generation is where there could be a power plant, but there are multiple independent facilities looking after the specific load profiles of each of the consumers, and that is something which the distributed utility looks after. This is a redefinition of energy architecture as we know it. It's not just like setting up a solar rooftop plant. It redefines everything we know about how we consume energy, and there are a lot of commercial implications to it. The most important thing is that each user is accountable for his own generation and his own consumption. And this is, of course, not right now, but in the future, this is the way it's going to be. Eventually, we will reach a place where there will be no distribution utility. There will be no losses. There will be none of these inefficiencies that we're looking at today. Maybe at best, the distribution utility is serving certain unserved sections of the society or underserved sections of the society, but the large part of the society is in a position to take care of themselves. Transmission network, no transmission or maybe minimal transmission networks where governments lose control of the grid because people are generating their own power and consuming their own power. And there is a potential in the future for people to trade surplus power between different user categories, probably again using blockchain and peer-to-peer networks and things like that. So there are significant benefits to distributed over centralized generation, and that's why it's a very powerful idea, and we need to engage with it, and we need to see how we can provide avenues to get these projects financed. So what are the types of distributed generation? So in agricultural sector, the government has also created a program, and there is a lot of impetus towards solar pumps in various villages and farmers. So solar pumps are a form of distributed generation. Solar rooftop systems are a form of distributed generation. Agrivoltaics, where farmland can be converted and you can generate power and consume it at the same point. Fuel cells, you have heating, cooling systems. All of these are examples of distributed generation models. This is the part where I tell you that India is a very exciting renewable energy market, and we have accomplished an extraordinary lot over the last 10-12 years. Some of you would like to interpret it as last 7 years. The rest of you would like to look at it as last 10 years. But in totality, we have a very exciting renewable energy market in India today. And there is a lot of solar capacity additions being added. Renewable energy in India, particularly solar energy, is considered one of the most attractive markets in the world. And there is, in fact, EY has rated it as one of the most attractive destinations in the world. We have something like 3 cents, 4 cents kind of tariffs in renewable energy at the moment. Rooftop solar also is a market which is growing at something like 60-70%. And this is also a very exciting and very promising market going forward. To give you a sense of how the business looks like and how it is that distributed renewables effectively work, there are 2 key players in the fray. One is the installer, and second is the client or the rooftop owner or the power consumer. And the installer is typically sometimes backed by government subsidy, and so government becomes a key player again. There is a role for a financier, and that is kind of the crux of this whole discussion. So the financier can provide funds to either the vendor, installer, to develop the project, or he can provide funds to the owner of the asset, or owner of the rooftop, or the client itself, to develop the solar plant. So in that sense, he's kind of a key catalyst and an important element here. The last element right at the bottom is the DISCOM or the utility. with whom there's a monthly billing arrangement, and the customer pays surplus, whatever is his surplus consumption, he pays to the utility. So he becomes a key player in this entire setup. So these are the different players out here. Now let's try to take a view of what are the different sort of business models which are available in this entire piece. So as far as the financing is concerned, there are presently NBFCs, there are banks, there are other financing solutions available, both for the vendor as well as for the client. There could be eventually blockchain-based lending solutions also, which could handle this. Between the installer and the client, there are installation services is a business, asset ownership is a business, asset maintenance is a business, asset optimization is a business. So all of these are business models which are available. Between the client and the utility, of course, there is various intermediaries as well, franchisees, discoms itself. There is scope for a lot of AI and things like that. So there is so this is the ecosystem, and these are the different business models which are possible in distributed generation. Specifically on the financing part, we have seen that there are multiple financing models available here. Every project is typically funded both with equity and with debt. So on the equity side, we have seen that most of the investors take what we call a platform-based approach, where the investor owns and operates a platform. So typically they buy out a company entirely and they become the owners of the platform, and then they infuse further capital to build more projects. The founders are then converted to employees for all practical purposes, except on LinkedIn, where they continue to call themselves founders because that's the cool thing to do. And then, of course, the upside for the entrepreneur comes in the event of a successful exit by the investor. And this in technical parlance, this is called an earnout or a carry. And in real world parlance, it's called a mirage because it never happens usually. So the other way that investors participate is that they get into certain specific projects where they have where a project has a yield of say 15 or 20%. They enter the project at a project level, and and usually they take minority shares in at a project level if the project is large enough, and then the investor eventually looks to aggregate all these projects and look to exit his portfolio to a similar investor who's looking for a return profile. So this is typically what's happening on the equity side, on the financing of these projects. On the debt side, there are the conventional institutions, NBFCs and banks. There's a lot of private equity available for existing NBFCs, like Encourage Capital has provided money to EFL. There are some other private equity funds which are presently evaluating providing specific lines to NBFCs to enable distributed renewables. Seekers Finance has raised some money, etc., etc. Similarly, the large multilateral agencies like World Bank and ADB have provided lines of credit to SBI, Punjab National Bank, other such institutions. So these are, these are the various avenues available for debt in the conventional market. The other element out here is the bond market, the crowdfunding market. We have seen, and it's our personal experience, that there are a lot of international crowdfunding platforms, both in Japan, Germany, Netherlands, etc., where investors are retail investors are quite friendly to Indian developers wanting to raise capital, maybe 1, 2, 3 million kind of capital. So that could present a very interesting opportunity for smaller Indian developers who want to raise some differentiated capital. So they don't want to sort of become a employee in a platform, but they want to raise the capital and sort of run their own ship. So this presents an interesting opportunity because there are retail investors in other parts who genuinely see the value in doing something like doing something like this, which is like rooftop, something good for the environment, something sustainable, etc. Similarly, there are green bond issuances by major renewable companies. So I've in fact these things keep happening every week. In fact, today I was reading about a green bond issuance by Renew, which is one of the large Indian developers. The third thing is that smaller independent developers, there is another option, which is called, we call it third-party guaranteed bonds. So there are larger multilateral institutions, because the problem with smaller developers trying to raise capital in the bond market is the unavailability of a credit rating for smaller developers who are people who are not like the Renews or the Azures or the Adanis of the world. So there are third parties, there are intermediaries, creditable intermediaries who guarantee these bonds, people like DFC and people like that. So, these people provide guarantees and smaller developers can raise capital. So this is the larger gamut of the financing options that are available for developers today. In fact, not developers, I would say for the market itself, because several of these can also be obtained by the project proponent themselves. So the client himself can opt to get a loan and set up the plant on his own rooftop. He doesn't need somebody like us to develop the asset. But this is the gamut that's available right now. And in my personal opinion, and this is what I've seen so far, is that there are some major challenges with the kind of financing options that are available. The first is that there is a requirement of scale, and I found no better way of putting it than to sort of put a picture of a scale there. Most investors are looking for a scale in terms of investing and exit, but there are a lot of these customers like individual residential societies or homes or MSMEs or small corporates or a simple like a factory owner or a restaurant owner who wants to set up a solar plant. Financing for these people is not getting through at the moment. There are major challenges in bringing them in. There are credit rating related issues and things like that. So that is one of the major challenges. I also see that in the market, most of the investment is focused on A-rated customers, highly rated customers, while that pool is very, very limited and is getting saturated very, very fast. There is a need to come up with some innovative models so that we can, in fact, reach out to lower rated entities and provide financing solutions. Today, as an individual, if you want to do a solar plant, you can get rates of interest of anywhere between 14-15% rates of interest, which is frankly unaffordable, and nobody would like to take that kind of an obligation just in order to go green. So these are all major challenges which we're facing, and these interest rates are primarily because there is no scale, and that is the primary requirement of most of the investors. The second thing is that we personally find that there's a lack of innovation, at least in India, in all the related spaces around distributed, renewables. So the kind of innovation that's happening in Europe and North America in terms of storage systems, in terms of newer solar panel designs, like what Tesla came out with, things, battery management systems, BMSs, and heating, cooling systems. This kind of innovation is not happening, and probably again because capital is being committed typically towards setting up platforms and not really towards encouraging some innovation in this space. The second is India-specific problems. There are India-specific problems, like not every individual has a roof. So how do you solve that problem, right? So there are ways to solve it, and some regulatory commissions are coming out with that solution, but that's not happening at scale yet. So there is a lack of innovation in solving India-specific problems as well. The other major issue is that there is financing available only for for assembly line kind of a structure where you want to invest money, set up 400-500 megawatts and exit, but there is no sort of these are all cookie cutter kind of approaches. There is no specific financing available for a specific requirement of, let us say, a cold storage owner in Agra who wants to set up solar along with storage for his requirement. So these are things which are just not happening at the moment. And the biggest problem we face is the government, and this I think is across the board, probably in all the BlueCircle presentations. The government, although has very aggressive targets in adding renewable capacity, their intervention in subsidy matters is a matter of great concern. Delays, a very very difficult tender process, and the timelines in terms of inspection and things like that. So government was supposed, the subsidy by definition is supposed to enable the sector while it's becoming a big dampener in terms of capacity addition. The DISCOM, or the distribution utility, which is the last mile provider, is also understands that there is a loss of business to them, and so they are also posing a lot of hurdles. So these are the major financing challenges that we face in the market at the moment, and I think this is probably true for most of the players who are in the market today. There is a need for newer and innovative models in financing. So as Calvin says, Calvin calls up a hardware store and he asks them if they're looking to sell catapults because he's looking to deliver a 50-pound payload of snow on a small feminine target, and the other end hangs up. So I think this is very symbolic of the kind of existing financial models there are in the market, because we are just wanting to throw money at a problem without really looking at how that money solves that problem and how that money will help us get to our goal. So Calvin, no one could have put it better than Calvin did. In my view, there is a need for a lot of innovation here, and it's something we are working towards, and something I'm sure others are also working towards. One is, of course, the main reason why end customers borrow at high rates is because there's a huge transaction cost involved. So how can we bring in things like blockchain to reduce these transaction costs and sort of create a very seamless transaction so that the end customer pays very little for his renewable energy? And and then therefore the total cost of borrowing is reduced and the total cost of energy is reduced. There should be crowd lending platforms as well in India, where we can do peer-to-peer borrowing for reduced cost of funds. I'm sure a lot of us would be willing to pay, if we get a return of 6% or 8%, because that is more than what we're getting in FDs today, if we know that the cause is a green cause like renewable energy. But these kind of platforms are not available, and I think a lot of innovation should go into that. Similarly, there should be platforms to enable end users to raise cheaper financing. At the moment, most of the capital is directed towards developers like us, installers like us, vendors like us. What we are looking for is, what we need is places where end users, where a rooftop owner can go and apply for a loan and get a loan quickly for this purpose. That is the need of the hour. In addition to that, of course, we look at, there's so much of scope for machine learning, artificial intelligence, in providing a efficient distributed renewable solution itself. And there is some work happening on that, probably not at scale, but there is some good research happening on that. And if that happens, I think that can be a catalyst for probably enabling better financing solutions. So to summarize, I think these are my thoughts. These are my ideas. Let me see if I have anything else. Okay. And that's it. Thank you so much. Thanks for your time. Happy to take questions. Right. So I have a few questions. I think first question is from Ratna Vats of Rack Ceramics. Where do we stand in renewable energy as a country? What's the future? So renewable energy is definitely bright. There is a lot of work happening on the utility scale, and India is adding almost 10 to 15,000 megawatts each year. Very aggressive targets. It's actually not just a target, it's also happening on the ground at a utility scale. At the distributed scale, not so much, but at a utility scale, the achievements are significant and enormous. So that's your answer. The next question is from Mr. Milan Chitwar. Energy efficiency investment, absolutely. Energy efficiency is a bit like distributed renewables. It's a very unique problem. It needs to be solved. It needs financing. The problem with energy efficiency is that it becomes very difficult to demarcate the asset. I can explain it in a little bit more detail. What I mean to say is that even a solar plant on a client's site is on his roof and the asset is in his control. But energy efficiency, in some sense, the asset is diffused through the premises of the customer. So it becomes very difficult to provide financing to a solution like that, because any investor or lender is looking to demarcate his asset, the financed asset, and to protect that asset. Of course, models should evolve, and I'm sure they will, but this is one of the reasons why I don't see enough financing happening in energy efficiency. Question from Mithilesh Jha from GE Energy. What is the maximum tenure of project financing available for CNI, solar or wind projects? It really depends upon the PPA, the tenure of the agreement with the counterparty. If you have long-term agreements with them, I have seen 10 years, 12 years, 15 years also. There is project financing available, at all levels. It really depends upon how secure you are at the other end in terms of your power sale agreement. The next question is from Mr. Prem Bajaj of PB Corp. What are the concerns of private financiers? Yes, private financiers, as I mentioned, they have No, there is no completion risk issue. Distributed renewables is a very easy completion kind of a project. There's no issue on that front. The major issue that we see is scale. Financiers find a lack of scale and they lose interest in the sector very quickly. And also the peculiarity of each customer and the requirement is very different for each customer. That is something which really makes it difficult for financiers to examine each project and provide financing. With decentralized solar, okay, the next question is from Surya JD Gunta. With decentralized solar, the production and consumption happens locally and no utility expenses. What would happen to transmission and distribution network debt payments, which are long term? Yeah, so too bad, Surya, too bad, you know. And, I was just looking at the balance sheet of a public sector unit today, which is a profitable hydro project company owned by the government of India. 25 megawatt project, they have 700 crores of debt. What is all this debt? It's nothing. It's just inefficiencies in the system. If a debt goes bad, it goes bad. And I don't think one should continue to keep a system alive just because debt is going bad. So that's my view. Other people may take a more conservative view, but my view is that debt goes bad for a reason. Srinidhi Sampath, what would be the financial benefit for the end consumer to put a highly variable renewable source and depend on the grid to complement the demand? The financial benefit at the moment is very good because typically discoms offer a benefit which is called net metering, where they allow for the customer to not only utilize his renewable source, but also to pump the surplus power into the grid. So it becomes quite profitable for the customer to utilize that. My sense is even without that, it will make sense. Because he does not have to deal with the loading and the other sort of distribution inefficiencies and transmission inefficiencies and things like that. So I think these are economics which keep changing because solar panel prices, storage prices are also going up and down. But yeah, at the moment the financial benefit works because there is a discount which is willing to share the load. Right. So crowdfunding platforms, actually India doesn't have too many. In fact, India has none at the moment, but there are some platforms in Netherlands and Germany, as I mentioned. You can look it up. I mean, they're energy specific. You can raise anywhere between 1 to 3 to 5 million. RBI also has a separate window for startups to raise this kind of capital and bring it into India. So we did that, in fact, for one of our transactions. But yeah, this is also available. Vamsi Srinivas, is there any particular wing in Department of Energy and source of finance? I'm not sure I understand this question. Is there any particular wing in Department of Energy? There's a Department of Renewable Energy, so maybe that's the wing you're referring to. Yeah. So there is a Ministry of Renewable Energy in the Government of India. So next is Mitleja again. What is the debt financing interest rates prevailing today in market? Any suggestion on optimizing debt costs in projects? Debt financing interest rates prevailing in market anywhere between 9.5%, 10%, 11% rate of interest. Optimizing debt cost, the only way to optimize debt cost is to go closer and closer to the consumer. I mean, the eventual provider of the capital. So what's happening in banks and financial institutions today is that they're taking money from you and me and passing it through their inefficiencies and then lending it at a premium to a developer or to a consumer. If by some way we can go directly to the consumer and directly to the retail provider and raise capital, that becomes the cheapest way. So whether that's a bond market, whether that's crowdfunding, any of these options. But to my mind, getting funding between 6 to 8% is very doable in theory, if all the inefficiencies in the system can be optimized. Raju Gupta, can we work on this together in India? Sure, we can work on this together in India. So why some states are discontinuing? Surya JD Gunta, why some states are discontinuing the net metering option and go for gross metering? Because they have a problem. States have a problem. They think that solar is going to eat their lunch, which it is, because all the good customers install solar plants. There is no load left for the distribution utility. So who pays their salaries? So that is why they are discontinuing net metering. But that's a problem that we need to solve. Yeah, that's a major issue. Yeah. So anything else? There are some people who've raised their hands. How does that work?
See, I think already questioned. So
Okay.
yeah.
So, Arshi, what are the problems according to you for providing finance to the residential market? So the residential market, I think the major problem is, of course, interest rates. Interest rates are too high at the moment. Quality of installations is also a problem because there's not enough good quality installers, and the customer does not have the ability to pick well. So in total, there is a lot of so these are the 2-3 problems. As I mentioned, the way forward is to find a way to get interest rates of between 6 to 8% for residential, for CNI, for all the customers who want solar today, and that is probably possible by somehow directly going to the retail retail market participant and raising capital there and providing it here. And that's probably the way to provide cost-effective capital to the residential market. Raju Gupta, again, regarding my contact details, it's available. I mean, happy to share.
So yeah, I think since there are no further, I think there's another question which has come.
There is another question. Can you elaborate on third-party guarantee way of financing? So there are institutions which provide sort of guarantees for credit enhancement. And these institutions basically, suppose your company is rated, say, B rating or a double B rating, you cannot raise a bond because the pricing on that will be too high and you'll not get subscription. So the way this works is that there are third-party institutions which provide partial guarantees or full guarantees on your product, which enhances its creditworthiness and takes it up to, say, an A rating or an A+ rating, which is when it becomes possible to raise money in the bond market. So this is available in a very specialized way right now, but there is a scope for this to happen in a much larger and much bigger way.
Great. So I think we can close the session for now, but if there are any further questions which we received from our members, I'll surely send it to you, Mr. Sampath, and hope for you to share the answers as well.
Thank you so much. It was a really, really interesting session. Thank you so much.
Thank you very much, sir. Such an insightful and engaging session, and a privilege to hear you. Our guests and I have been hooked on till the very end, and I've taken on several nuggets from today's discussion. And
so nice of you. Thanks for saying that. Yeah. Thank you. Bye.
Thank you. Bye-bye.